Hello, everyone, and thank you for taking the time to review the Santa Clara County real estate market analysis for December 2008. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all the southern Silicon Valley area. Now let's go ahead and jump in and take a look at the supply and demand numbers. Now this is just looking back over previous years. So this is the month of December going all the way back to 1999. That way there's no seasonal compensations we need to worry about. Now that first chart indicator there on the left side of each one, the sort of lighter brownish colored one, is the sales numbers. And let's go ahead and look at those first. You can see on this chart that we've actually got a little bit of an increase in sales from 2007 to 2008. Sales were actually up 38.16% when compared to 2007. That gave us a grand total of 677 homes sold. That's 187 more homes sold in 2008 in December than in the same month in 2007. Now, as you can see, the next bar, the slightly darker bar, that is the total number of homes that were listed. That increased by 12.05%, which gave us a grand total of 1,060 homes listed in the month of December. That was 114 more homes listed in the month of December of 2008 than in the same month of 2007. Now we can move on now to the inventory numbers. We can see that we've reached an all-time high now for inventory. Inventory rests now at 4,640. That's an increase of 477 homes from the same time last year. Just a very dramatic increase. Now, the next number we're going to want to look at is what I like to call the magic ratio, because it basically gives us a good sort of barometer for how the market's doing. We arrive at that number by dividing the total inventory by the total number of homes sold. And this month, that gives us 6.85. That tells us that if we were to freeze these numbers as they are right now, it would take us about 6.85 months to sell every home currently in the inventory. So a little bit over a half a year's worth of inventory on hand. Now, another way to look at this, for my sellers out there, this is an important number for you, because it also sort of tells you what the competition is like out there. So for every home that sells, about 6.5 homes are on the market. Now that's actually pretty good. We've had months in some areas where that number is extremely high, where for every single home that sells, there's 10, 15, sometimes 20 homes on the market. So that's actually an improvement from last month, which was at 8.52. That's a pretty dramatic change from one month to the next, and it's good news for sellers, particularly in this time of year in this type of a market. Now, do we see anything else here in this chart that gives us any sort of insight? Well, we definitely want to look at how quickly these things have increased and by how much. We can see it was a pretty steady increase from 2004 up through 2006, really a kind of a steady climb, and then 2006 to 2007, a dramatic increase in inventory in Santa Clara County. And luckily, we didn't see that same dramatic increase between 2007 and 2008. So the good news is that at least we're not increasing at the same rates that we saw between 2006 and 2007. Okay, now let's go ahead and take a look at these same numbers just over past months. Now you'll notice a little bit of a change on this particular chart this month. I've gone ahead and added the averages here for these to sort of give you an idea of what the trend is. Now in the past I've asked you to try and get a feel for what the general trend of these numbers are, because these numbers are not just according to month. In other words, we've got this, it's not one month, it's not just the month of December. This is just chronologically going back all the way to October of last year, and so you'll get the fluctuations that you would normally expect for wintertime, summertime, those types of things. And so I'm inserting this bar here to sort of give you an idea of what the general period that we're looking at. Now, as you can see with the blue bar, which is sales numbers, we're actually up a little bit from last month, from November. We're actually up 9.55%. That's actually pretty good news. That's 59 more homes sold in the month of December than the month of November. Now, listings, those went down 16.07%. That's a total decrease of 203 homes being added to the market. So that's also good news. And inventory is down 11.84%. That's a drop of 623 from the same from November of 2008. So that's all actually fairly good news. An increase in sales, decrease in listings, and an increase and a decrease in the overall inventory. So that trend is actually pretty good. We'll see in a little bit how that the increase in sales is actually more of a factor that's involved with foreclosures and short sales, but at least these homes are getting sold. The more we can get off of the market, the better. Now, another thing I like to use this graph for is to try and anticipate where we might be going with this market. Now, we get to see a little bit of how does this fit in with last year at this time. So let's go ahead and look at October, November, and December of last year. You can see it was relatively flat performance, but between October and December, we did get a dip in sales. We did get a dip between October and November, but then we didn't get a continuing dip in December. I see that as good news. We're seeing more buyers out there. Obviously, their attentions aren't on the entire market. Their buyers right now seem to be quite a bit more focused on short sales and foreclosures, but again, we'll talk about that in a minute. Now, as far as listings are concerned, and before we move away from sales, though, what do we think is going to be happening in the next couple of months? We can see January and February. Last year, we saw a decrease in sales in January, and then we started to see things ramp up to the summer months in May and June, and kind of peaking out there in the June-July timeframe. What do we see for the coming months? January, will we see a decrease in sales? Frankly, I don't think we will. I think we'll probably see much better sales performance in January of 2009 than we did in January of 2008, simply because a lot of folks are out there taking advantage of these well-priced homes, foreclosure homes, short sale homes. So I don't think we'll see as much of a dip. We may see a little bit of a dip, simply because, remember, the numbers that we'll get in January reflecting homes that sold probably went into escrow in December. So I think in general, the Christmas season slows people down on this. So we may see a little bit of a decrease, but not nearly on par with the decrease we saw at the same time last year. Now, as far as listings are concerned, the trend we saw last year was a decrease as we moved from October to December, then an increase in January. We see the same trends this year. From October to December, we see general decreases. I think we'll see the same thing this year. I don't think we'll see as much of a jump in January from the December numbers, simply because I think there's a pretty good probability that fewer people took their homes off the market this holiday season because they simply couldn't. They couldn't afford to not have their homes off of the market. So they left them on. So we won't see that big rush to get back onto the multiple listing service in January that we might have seen in previous years. Now, inventory numbers, what can we expect there? Well, we're seeing sort of a similar performance here. Last year, between October and December, we saw inventory numbers drop between October and December. This year, saw the exact same sort of trend. And that usually is an indicator of some folks taking homes off the market. Obviously, folks who aren't in a tough spot, those who aren't in foreclosure or short sale situations, are going to be more likely to take their homes off of the market in those winter months so they can enjoy the holiday season. And that's clearly what we've seen here. So will we see another increase in inventory next month? Yes, I believe we will. I don't see any reason not to expect inventory to continue to ramp up for that first quarter of 2009 as we head closer to the summer season, and some folks see that as their best opportunity to get their homes sold if they have to get them sold. So now let's take a look at the trend lines. Inventory trending up. I think that's pretty obvious. The one good piece of information we're getting here is that while inventory numbers are trending up, which isn't so great, we are seeing a relatively flat performance of homes being listed. I think that's a good sign. I'd like to see that stabilized and not see that get too crazy. The real encouragement here, though, is that we are seeing a very slight increase in sales as a general trend over the period of time that we're surveying here. And I think that's good. Obviously, we want to get more of these homes off of the market. We'll just hope that this can continue on. But let's go ahead now and take a closer look at those properties that are selling, because it's some pretty shocking numbers this month. Now, this particular slide is a new one. If you've been a regular viewer of this series on market analysis, you'll know this hasn't been here till this month. Now, this one's strictly on short sales and foreclosures, and we're looking specifically at what percentage of the homes that are getting sold do they represent. Now, you can see that short sales represented 11% of the homes that sold. Foreclosures represented 49% of the homes that sold, and conventional purchases represented 40%. So the minority of only 40% of homes that are getting sold are being sold in what we consider a conventional way, just buyers and sellers finding each other. A full 60% of the homes that are being sold are either short sales or foreclosure properties. And the number that are foreclosure properties is really very shocking. That half of the homes out there that are selling in Santa Clara County are foreclosures. It is really amazing. So we'll continue to track this number for you. One of obviously the main reasons why I included this slide was because I wanted to be able to communicate to you in an easily understood way how much of our market's currently being occupied by short sale and foreclosure properties, but also because I don't have any slides with a pie chart on them, and I thought, You know, the time has come. We need a pie chart, and so here it is. Now let's go ahead and take a look at home prices in the same month in past years. Again, this is just the month of December going back to 1999. The average sales price in December of 2008 was $657,842 in Santa Clara County. Now you can see that's a pretty dramatic drop from the same time last year. It's actually a drop of 34.14%. In dollars, that comes out to a decrease of $340,936. Now, this has a lot less to do with the spread of total homes that are out there on the market. Remember, this is data only pertaining to the homes that are getting sold. What this tells us, it tells us less about where you need to be priced and more about where the attention of buyers is currently focused. With that last slide, it's hard to argue that buyers are not focusing on foreclosures and short sales, since those tend to occupy the lower end of the spectrum on price. Clearly, that's where folks' attention is going. And frankly, buyers are seeing short sales and foreclosures as the way to go, the properties to be buying. Now, there's a couple of areas of thought on that. Personally, I think it's smart to not isolate yourself just with foreclosures and short sales. I have an awful lot of buyers that are only subscribing to the short sale and foreclosure lists on my website for various areas here in Santa Clara County. And also keep in mind that at my website, you can get short sale and foreclosure data for everywhere from San Francisco all the way down to Monterey. So feel free to you can create your own search and have those emailed to you on a regular basis if you like. But I think that it's a mistake to isolate your search just on those properties, thinking that's where the real deals are going to come from. I've seen an awful lot of conventional transactions take place that are on par with REO, with short sale and foreclosure properties, but don't have any of the baggage associated with a foreclosure or a short sale property. The bottom line is most short sale properties do suffer from some abuse. That's the way it is. Folks do not want to be in these situations, and you'll often find that frustration gets taken out on the property itself. There are obviously various horror stories on those, but also on the flip side of that coin is because short sales and foreclosures have become so much more mainstream in our market, the average quality of a short sale or foreclosure has increased. I actually looked at several properties today, two of which were short sales, one a foreclosure, and they were not at the level of a conventional listing as far as just upkeep and whatnot. There are definitely some issues there, and you definitely need to have some money in your back pocket when you buy these properties to take care of some of these issues after you've purchased them. But in general, I mean, for instance, foreclosures I would see in the 90s were horrible. I mean, just holes in the wall, holes in the floor, water damage everywhere. Some of them were horrible. While some of that still exists now, clearly the vast majority of them are at a much higher level of acceptability than in the past. Now let's go ahead and review what the highest priced home was in Santa Clara County. That was on Greenwood Road in Montessorino. And that home sold for $5,200,000. Originally listed for $6,800,000, so they did have to take a pretty big dip in the asking price. Total days on market was 62. The reason I mention this is not just to sort of say what the high point was as far as the price of a home that sold, but also indicate that we are, and to demonstrate that we are still seeing activity at different levels of the market. When there are fantastic deals in the $2 million, $3 million, $4 million plus realm, there are people coming out who can afford to take advantage of those. So it's not like any one of these price ranges is a complete wasteland for sellers. It's really just a question of having the right folks out there getting your home marketed for you. Now, the lowest priced home was on West California Avenue in Sunnyvale. That sold for $526,000. Now, this one is a particularly interesting property. This one had been on the market for about 7 months, and at the time it sold, it was listed, its list price was $434,900. So at the time it sold, it ultimately ended up coming out at an amount over the asking price. Now, 7 months ago, it was listed for $550,000. Didn't sell, languished on the market for 4, 5, 6 months. It got listed by a new office. That office came in with a more aggressive idea, I think, here on selling this property. Said, let's come in at an extremely low end and get a bidding war going on. They listed it at $434,900. And after just 2 weeks, the property sold for $526,000. And if you're doing your math out there at home, that's only $24,000 less than what they wanted to try and sell it for 7 months ago. And realize that in the last 7 months, average home prices have dropped substantially. So not only did these folks get their home sold, they got nearly the price they wanted 7 months ago, but because they were willing to invest their faith in a much lower price that brought in bids. That was very smart. What we're seeing in Santa Clara County is that anything priced under $500,000 is getting an awful lot of attention. So if you're a seller out there, you need to be willing to take risks like this to try and get your property sold. So I think this was a very good move. I've actually done this kind of thing with properties I've sold in the past, and it's a great way to get more interest in a property, generate more interest, and potentially bring in a lot more offers. Now let's go ahead and look at home prices over previous months. And the trend here is pretty tough to buck. We've been seeing this trend now for months. It's no big surprise, just a steady drop in the average price of homes. Now from November to December, we saw an increase actually of 3.18% for average home price. That's a dollar increase of $117,050. Now what I'd like to point out here though is that this again just represents homes that are selling. This doesn't represent all those homes that are out there on the market. So what you need to understand is that there are buyers at various levels. That this doesn't represent necessarily where you should be pricing your home, whether you should be dropping your home by this percentage. It's really, I think, more of an indicator of where buyers have been focusing their interest. They've been focusing their interest on the lower end homes, these foreclosure and short sale properties, and those have really been the ones that have been making the market move primarily. So that's why this average number I think is where it is. Now let's go ahead and take a look at how many days it's taking to get these homes sold. Now again, remember, this number represents just homes that are sold. This doesn't represent anything about how long certain homes have been on the market. Now the days on market is actually up 21.05%. That's 16 more days to get a home sold in December of 2008 than in December of 2007. It's been a pretty steady increase ever since 2004. We had a big jump between 2005 and 2006, but it's been pretty steady since 2006. It's been a steady increase. We haven't seen some gigantic increase like we did between 2000 and 2001 when we had the stock market crash, the tech bubble that we got back in that year. Now, if we look at these same numbers just for past months, and this is going all the way back to September of 2007, now remember, these are all going to be influenced by seasonal type of issues. You can see that we're actually down a little bit. It's down 2.13% from last month. That's 2 fewer days than last month. Is there any other good information we can get out of this? No, in what we saw before, there's really an indicator here as far as days, when days go up. For instance, let's look at this chart. You can see that when compared to the same time last year, November and December last year, we really just had a steady increase then, and we sort of have leveled out now. Now, if you'll remember, we've had increased sales over the last couple of months, and really what this chart is telling us is that because more numbers of homes have sold, what we've done is take some properties that have been on the market much longer than others off of the market. So this is a very normal thing to see the days on market increase when the volume of sales increases. So if suddenly we go from selling 5 homes to selling 15 homes, we're selling more of the inventory. So as a result of doing that, we're tending to sell more homes that have been on the market longer. I'm sure that makes some kind of sense. But that's why these numbers tended to be a little higher now, because we've got more homes that have been sold just as a number. And then this reflects the fact we're taking some of these homes off the market that have been on the market for a lot longer. Now, I do appreciate you taking the time to listen to what I have to say on these market analysis. Excuse me. If you'd like to visit my website, you can find all sorts of good information there. In fact, if you're interested in doing any searches on any area from San Francisco to Monterey, whether it's relating just to short sales and foreclosures, regular homes, rental homes, investment properties, lots, whatever, you can get full access to those search tools at my website. You don't even need to leave your phone number or email address. Feel free to use that search engine anytime you like. It is map-based, so it's very easy to use. You can also find all of my other video presentations there, linked to YouTube and also to my site. You can also find my weekly podcast and other articles that I've written relating to real estate. Now, if you prefer to contact me via email, please do so at robert@soldbyrobert.com. I'm always anxious to read your ideas, suggestions, observations. If you prefer to talk to me via phone, please feel free to dial me up at 408-852-0525. If you prefer to use a instant messaging program like IOL Instant Messenger, Google Talk, or Yahoo IM, just use the screen name The Rebel Broker and you will find me there. I'm up most days. And if you're a Skype user, the screen name is Rebel Broker. Now, of course, referrals are always appreciated. If you or anyone you know is interested in real estate in the Silicon Valley area, please feel free to get in touch. I'd be happy to help you in any way I can. And of course, if you are shopping for real estate anywhere in the United States, I can help find the right agent for you. So feel free to give me a call. Tell me what you're interested in. What's the most important thing to you with your real estate goals? And I'll find the right agent in your area to help you realize those goals. Thanks again for listening, and I will talk to you all next time.